These are the 24 chart patterns you want to spot when trading to be as profitable as possible. Let me show you. Now, these 24 chart patterns I'm showing you here are the most repeatable patterns in trading. Now you may be thinking you've seen this before and that doesn't work. Let me show you how it does. Starting off in Euro USD, we're going to talk about the double top. Now the double top is when price hits a high, comes to retest it and rejects. You can't take every double top you see because some of them might not reject and some of them may actually be a continuation pattern. So how do you spot the differences between a real double top and one that's just trying to trick you? Let me show you. This double top here, you can see that it's very visible that this is going to be a reversal pattern for three main reasons. The first one is the price was in a downtrend. If we zoom out here, you can see that price was already in a downtrend and it didn't look like it was going to stop anytime soon. The second reason I was very confident that this double top was going to reverse is because of the support zone it was touching. Let me show you. That's a support zone that the price hasn't been able to break before. So why would it try break it now? It could do, but with other confluences, I was pretty certain that it wouldn't. The third reason I knew this double top was ready to reverse was because of the RSI. If we take a look at the double top in the RSI, I'll show you what I mean. On the chart, you can now see the two lines I've drawn. Up here, you can see the double top has gone from one high to another. Whereas on the RSI, you can see the first top was actually higher than the second one, meaning there was a diversion in the RSI. So that was the third and final confirmation that I needed so that I could place a trade once that orange candle had formed. This is what my trade would have looked like. My stop loss would have been above this recent high here, just in case price did want to test that support zone one more time. And I'd have aimed for a 1 to 2 risk to reward ratio as I normally do, or you could have aimed for the bottom of this section here, aiming to get the double bottom, which would have resulted in a roughly 1 to 2.5 risk to reward, giving you £250 for every £100 you risk. Let's move on to number 2. Now double bottom is the same thing, just reversed. Any pattern that happens in a long position can also happen in a short position. If a double bottom did the same thing, I'll be looking at the exact same confluences, just in reverse. So keep that in mind with everything I show you. Everything that happens on the bottom side is the exact same, just in reverse. Now the second one is a bearish head and shoulders. This is exactly what it sounds like. It's when you have one large spike in the middle with two smaller spikes either side, showing that the price is looking to reverse. Let's hop on the charts again. Head and shoulders patterns may be difficult to identify sometimes. However, once you get used to looking for them, they're not too hard. This pattern here is actually a head and shoulders pattern. As you can see here, the first shoulder is this blue candle here, followed by the head, which is this candle, followed by the shoulder, which is this candle. Now, once again, you can't take every trade opportunity that shows your way. This trade I would have taken it myself. Same three confluences, let's go take a look. Once again, we're looking for a short position, so what trend is the market going in? Let's zoom out again. Once again, it's in a downtrend. So this reversal pattern to the downside is correct. So that's confluence number 1 done. Let's look at confluence number 2. Are there any support or resistance zones around the top? Yes, there is. That's a support zone there where price is used as a resistance before and a support a few times before that. So here it's showing me that once again, price could go past the support and resistance level. However, it might not. So let's keep an eye on the support and resistance level and see if the price respects it. Thirdly, the RSI. The RSI doesn't actually show me that there's a massive divergence. So what am I going to do? I've got three confluences. Two of them say that this head and shoulders is going to be correct, and one of them says that it's not sure. I'm going to take the 2 rather than the 1, as the majority of my confluences are telling me that this price is going to go down. Here's what my trade would look like. My entry point would be the orange candle after it's reached the bottom of the shoulder. So there would be this candle here, just underneath the low candle here. My stop loss would be just above that high there, just in case price wanted to come and test it again. And my take profit was going to be 1 to 2 once again. Let's see if this trade worked out. And there we go. After a while, this trade worked out beautifully. Let's move on to the third chart pattern. Now, as you can see here, pattern number 3 and 4 are the rising wedge and the expanding triangle. Now, I can't teach you about these because I don't personally use them. So it would feel a dishonor to teach you how to use these when I don't use them myself. So let's skip past them and move on to something else. Number 5 would be the bearish triple top, and same thing with the bullish triple bottom. Once again, they're the exact same thing, just in reverse. Let's go take a look at these triple tops and see what they're on about. When there's a double top, there could well be a triple top. You've just got to look further out. Once again, if we're looking at this chart, you've got what looks like a double top here. Price touched here, got rejected and touched it again. However, if you look further back, the price touched it one more time here. So, can we take this trade? Of course we can. And it would result in a win, just like this. However, I'm not going to use this as an example. I want to find something a bit more concrete so that you can see it easier. But let's talk through this anyway so you can learn. My stop loss was just above the high of this candle. Once again, just in case it came up to retest it. My entry point was just as it rejected off the triple top, and my take profit was a 1 to 2. Let's go look at another triple top. Here's a really good triple top in action. Let's take a closer look. You've got the first stop here at 6 o'clock in the morning, the second one here at 10 o'clock, and the last one here at 6 o'clock once again. So you've got these three tops all lined up perfectly on support and resistance zone. So that's my first confluence done. Let's zoom out and check if the price is in the trend we want it to go. Now, since the tops are facing bullish, we want the price to go bearish. So are we in a downtrend? The answer to that question is no, we're not in a downtrend. As you can see here, price is going further up as we go. However, it does look like we've come to the top of this uptrend that the price wants to reverse. Now, this is a risky trade. I've played some of these and they've bit me in the backside. However, I've also played some and they've made me a lot of profit. So this is up to you. And this is how you get used to trading and how you get used to reading the charts will determine if you take this trade or not. Me personally, I can see here that if we zoom in on this triple top, it's reached the support and resistance zone that's been tested prior to this. And if we look at the RSI, you can see on the RSI actually that this has got a divergence as well. You've got one here, then it gets lower, and then it gets even lower. When in reality, the third one is actually taller than the first top. Now this is what my trade would look like. I'd enter my trade as soon as it hits the bottom of this triple top. So down here on this orange candle. My stop loss would get extended to just above it. Now because this is a risky trade, I'd only risk half of what I normally do. So instead of risking £100, I'm only going to risk 50. This is purely because it's a risky trade and I don't want to put more money on the line than I feel comfortable with. So my stop loss is set just above the support and resistance zone, once again to let things play out, and my take profit will be 1 to 2 as always. Now, as you can see there, the price hit that lovely. However, I only risk 0.5%, so my reward is only going to be 1% instead of my normal 2 to 4%. However, I can't complain with that. I'd rather risk half a percentage when I'm placing riskier trades rather than risking a full percent and losing my 1%. I'm afraid that's all I can teach you. I personally don't trade continuation patterns, so once again, I'd feel it'd be a disservice to teach you something that I don't personally trade myself. Let me hop back onto the slideshow so you could screenshot this and practice it yourself. I hope you've all learned a lot from watching this, and I hope that these reversal patterns that have helped me tremendously can help you do well in your trading. Once again, make sure to have more than one confluence to make sure your trade is going in the direction you want, and that it's not some fluke that's going to miss out on. Second of all, make sure to be safe and adjust risk accordingly. Third of all, journal your trades, and as always, I'll see you tomorrow.